The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Basil Chapman here on this Thursday, the 16th of March. We're looking at the Dow down 266. After yesterday's action, this is really poor. We should be not more than minus 60 at this particular point and starting to make higher highs on the day. Very, very disappointing. We're looking at the S&P, which each one has been a little bit better than the Dow. The S&P is actually now down 19 at 38.73. Down 0.48%, Dow's down 0.79. Looking at the QQQ at a really nice rally right to the inside track repellent zone right there. Now it's stalled. It's now down. It was up quite nicely before. It's down 11 cents at 298.82. Looking at IWM, the Russell 2000 small caps, very poor action, down 235 at 171.26. We should go to the gold. And gold has been moving up from the low of the day. It's now at, it's down 2 at 1929. But this is the issue. Look, and let's just show you silver. So that's a leg C in the daily chart. Silver's in a leg A. Whoops, was that a new low? It was a new low. I should change that. So this is the alternate count. That's EFG/C. Oh, how many times do we see the G's go to a G/C and then go to a D? Unbelievable. Let me just show you this right here. G/C on the way down. And then it just breaks it by a fraction. And you got your leg D. And now it's a trough D. And we've gone to a leg A. Right, stalling at where? The 200-period exponential moving average. The weekly chart is still in a sell mode. And the monthly chart is just in a trading band. That's going to be very important because you would like to see silver go with gold, even though gold, as I see it, is really a kind of a hedge for the crisis in the financials. I wonder what CS is doing. Credit Suisse. Credit Suisse is up 4 cents at 221. It was at in the 350s just about 3 weeks ago. Plunges down to the 160 or something. 170, and now it's trading at 221. 54, was it a billion bailout? Oh, man, I tell you. And then they said something about UBS. In the tradition of the Swiss banks, UBS would be the next in line to take it over if there's a problem. UBS. Trading at 18.36. This is not too good. All right, what we're looking at, of course, is we want to compare what's going on in gold. And as I said, the dollar is down a little bit, down 20 ticks at 104.53. Look how it's glued to the 200-period moving average. That's important. It's not breaking out to the upside. It did go to a peak D with a doji top. Talk about peak Ds. Let me show you this. So in the den, there were questions about NVIDIA. So first of all, the 1 minute chart just went to a peak D with a doji candle. In the 39.20 area is now 39.01, making the arch formation. The NVIDIA, which was it wasn't any question for me. It was just there that I noticed it. And I thought, I've followed this for a little while now on the 1 minute chart every once in a while to see, because it gives a good clue as to what the semiconductors are doing. Went to a D and then a fractional E, and now it's pulling back. It's not breaking down because the 10-minute chart, although I've got it as a leg F, the 9 is still way above the 14, so it's still very good, very strong. And in a sense, that's also telling me, excuse me, about some of the sectors in the market. So we're going to be watching we're watching NVIDIA, watch semiconductor, and let me do this on a very short-term basis. Semiconductor, peak A, B, C, D, E, and a spike up to maybe an F, but it could be an alternate count. Still doing well. I like the fact that the semis are moving. It's just important to me as a benchmark for the overall market, which says we do have some cushion to the downside. So, yes, we are still along the part of, in the portfolio, we have trading positions on the Dow, whether it's short or long. We've added to our long position 3 times long. I don't know how long it will stay right now. It's just it's ahead, and we'll see if it can stay that way. Or is it just, it's down just a little bit now because we had a quick move down. ESM23. Okay, now I want to go to this, and I think that this is going to be quite a big tell. Let me just open this up. I want you to see, I had a question here. Where did we go? We'll look at Amazon in a moment. Would you add gold for the daily and weekly peak Ds? Okay, that's a really good question. So let me just show you. Here's the TLT. This is stretching the daily out. Remember, from the way I look at markets, I like to see price points. I like to see how it reverses and whatever it does. If it starts to outline parameters that are very important, those parameters stay in place until they don't matter anymore. Well, the 108s in the TLT, which is the Lehman iShares 20-year Treasury Bond Fund ETF, it actually could have more than 20-year bonds, but it's 20 or plus, maybe 20 and 25, maybe 30s as well. So what we're looking at right here is that high that was made at the peak G in the Chapman wave on the 7th of December was at 109.68. It dropped sharply under 100 to 99, and then spikes up and it goes to the 108.77 level. 18th of January. Makes a little cup formation retest, and it goes to what? It goes to 109.35, under the previous high. Then it drops again down to the 99s. It tests it twice, just as you had that test in the 108, 109 area. You've got the test here in the 99s. And what does it do? It has a big rebound, and it goes to it goes from 99 to 109.18. So it's all within this resistance zone. So that makes it really important because the 200-period moving average, that orange line, is at 108.93. If there is a move in the next week, let's give it a full, what's today, Thursday? Today, tomorrow, and all of next week. So I'm going to move over to the weekly chart. If there is a move to close above 109 into the 110s, actually in this case it doesn't have to close, it just has to bounce there. Not only will that be very important to the weekly chart because it is, I can't actually put in an up arrow to say it's in a buy mode from the 91.81 low back in, I think it was October, but this is a leg A. Look, all the way there's no peak. In other words, each higher high in each bar has a higher high. So you extend this, called the floating ladder. So it goes A from there, then it goes A, stays A, stays A, stays A, stays A right to there, and then there's a lower high, becomes a peak. Just like a mountain. You know, peak is a peak. It comes back, and underneath that previous high makes a peak A, then it makes a peak B, and then it pulls back even sharper. But this is your starting point right here. Just circle it right here. I'll be back in a moment. Dow's down 265, S&P's down 18, Basil Chapman. We're looking at bonds.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. We're looking at the TLT, and it made a peak B at the 200 period exponential moving average. Let me just show you once again the TLT. That 200 period moving average, once you get close to it and then you hit it, it becomes a magnet, and now it's a magnet. It means even if you go up high, you're going to be retesting it. Even if you stay down here, unless you pull back from 107.78 where you are up 167, and you start to trade for a couple of days below 106.30, something around 106.30. So that's what I'm looking at here. And now what I want you to show you is if there is a move above even this peak B right here in the weekly chart, the week of the 3rd of Feb, above 109.15. That's a little bit of way to go. But if there is, that becomes new leg C, and then I will put an up arrow in here to say then we're in a buy mode. And what that buy mode essentially says is that this rectangle formation here can go above. How far above is going to be really important, because the magnet of the midpoint at 104, about 104.50, is very strong. But you can see in the monthly chart, we've done this before. We've had big moves to the upside, and then it stalled. When was this? I think this was back in 2021. Yeah, 2021, we had that, I think it was February or so, rally and ran all the way for a while. Let me see exactly. No, it wasn't February. February would have been over there. This is, yeah, it was March. So March rally, and then it stalled at a peak B, made a dreaded H, that arch formation, and took out the left side low, and then plunged to the downside. So we've seen this move before, but until you get, it's not so much time, it's price. We've used time before, and it didn't very well. I'd say at 130, say 132 to 152 in bonds, that's a big move. But I'm really talking about price. It has to have a price velocity straight up into the 113s. If it does that, that's just something we haven't seen in that kind of speed in quite a while. All right, so at this particular point, I'm anticipating going to the TBT, that low that was made and in the 27 to 26 area, let me just give it to you right here. Oh, there it is in the weekly chart, has made a lowercase h. You know my rule of thumb with the h that goes to a lowercase m. If that first low barely took out the left side low, that after the left side low of importance, takes it out, closes above it. It says you've limited the upside, and if you come back down again and take it out, that is very serious, and that's what we're looking at here. I'm not even going to draw a parallel line. I'm going to, a horizontal line. I'm going to draw it with a trend line. And there's a trend line, trend line up, trend line down. There's a Chapman wave falling axe formation. Is it going to break to the upside, or is it going to break to the downside, making lower highs and much higher lows? Lower lows and much higher highs, and then it turns around at a peak B. So that's going to be very important in this M-shaped formation. And as it looks right now, it looks very much as if the bonds do want to test the low that was made 4 days ago at 2670 or something, 2673. If it closes under 2630, I think we're looking at something very different. And that means that the TNX, which is actually the 10-year yield, I don't want to mix these things up, but they're in the same direction, is on its way down at 33.82, 3.382, down $1.10. And we're looking at this right here. The low is 33.34. I might as well just put it in. 33.34, just another 50 cents. 34. Yeah, another 50 cents and we go under it. Woo-hoo. Wow. Okay. So now within the context of the questions that I had, so that's the bond part of it. The GDX, oh, no, you want to look at gold. And the question is, where would you add to gold for daily and weekly peak Ds? So I would do this. I had this for subscribers this morning, and I just decided I needed to hold off a day. I might be wrong, giving it a little time, because I think that while this financial crisis is going on, we just cannot ignore it. We cannot say, there's going to be an outcome here that's satisfactory, because it's many outcomes that have to be satisfactory. In other words, I just spoke about Credit Suisse, but let's just take our own. Let's just see where Charles Schwab is trading. There's Charles Schwab down $3 at 56.55, and it had a huge move from a round number low. It did do the Chapman wave. This is the Chapman wave price volume climax reversal. And that says that it shouldn't break 45 in the next 28 sessions. Well, I have to tell you something. I've done this a number of times, and we've looked at it, we followed it in certain stocks. But at the same time, it isn't the entire group. It's usually that particular stock that sees a move down and then a climactic, just like a throw in the towel, where everyone says, I'm done, I'm out of the stock. And then it can go, and it usually does. It goes for about 28 days. And if it can hold 28 days well above that low, it can go for 56 days. Now, or 56 sessions, I should say. This is going to be a little bit different because it is in an area that is proving, the whole financial area is just proving to be so vulnerable. Look at this. What was that? RFC, I think it is. RFC? Oh, no, FRC. Yeah, FRC. And that is First Republic Bank, is it? First Republic Bank. Look at that. Has this whopper of a move from the 200-period moving average. In February, it was trading in the 140s. Bam. Down to below 20. 220, I think, 2031, 20. Oh, no, 1753. That's right. It just went straight through 1753. And then it bounces up strongly for a day. And it goes to 50.97, and today is down to, so the result of each effort to either save whatever it is that's under intense pressure, there is more than that involved. It's actually very complex. And if you get one, you can do it. But if you get a whole slew of issues or symbols in a particular sector, then you've got to be careful. And I think that's also what's very much weighing on the overall, especially the Dow now that it does have three financials. Now let's go on to the question of the gold. And I want to say that gold, is still in the sweet spot, in that I don't think that all of a sudden everything dissipates from the tension of the financials, and then gold is released from its obligation, what I consider its obligation to be an insurance policy for countries and huge institutions. So I look at it and I say, so the question is, there it is. Where would you add to gold for daily and weekly peak Ds? In other words, the anticipation that the weekly is at peak C pulls back very sharply. I would say I would add right here at 1931, because it's adding to a position you already have. But this position, you see, if you put in a stop, then you're going to have to get back in if you're still expecting a D. So I would say I would start with a small position. I'd have a split entry right now, start a position now in 1931. Tomorrow we can talk about where you would add.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
We're back. I had a question in the den here. So look what we've done. We've made a little cup formation in the 1-minute chart. There's this, what I like to draw as a cup. And I went from this big candle here to the left side to the right side using the plumb line and the Chapman wave inside wedge target resistance line. It's bumping up against it now. There's just there. You remember 1020 to 1030 comes in a different kind of a buyer into the market. This is the person who's waited for all the conflagration, the mixed messages that really go on from about 9:30 to 10:20, 10:30. And now, because they have positions that they want to put on, this is where other things can happen. So we'll see whether or not any rally now can be sustained. And it has to be sustained into about 11:30, 12:45. That because if it's sustained through that period, it means you can go into lunchtime with at least a slightly positive bias. At this point, it's still, okay, good. Thank you. So at this point, it's still kind of up in the air. There are a lot of things going on. So a question in the general was, if TLT, well, let me just get that, TLT, if TLT breaks out above in the levels that we're talking about, would that make you bullish? I would say that that would be one part of it, but it's a very big question because it would also say, now what are we looking at? We're looking at things are so bad that the Fed is afraid to keep pushing the rates up. So I'd say in certain sectors, I think it'll be very positive. Not everywhere, but in certain sectors. Yes. It would have a connotation that says there's an alleviation of pressure in some areas, but not in others. But it does take away the idea of higher rates, meaning that companies won't put money to work because it's just too expensive to get that money. That's part of the thinking. But this is not a simple market. This is now a very complex market. So I don't want to get too carried away thinking things out of the box on the fly. I'd rather think it through and see the positions and see how the banks are because if the banks are still acting very poorly, that's not going to be good for the market regardless of what the rates are doing. So, okay, with that said, I wanted to go to a question. So the gold, as I said, I'd split, right here, I'd enter that new position, and then but it would be a split position. I'd wait for a bit of a pullback. And if you don't get it and it goes to D, that's okay. You're in the position because the next higher high, if gold gets to 1958 in the continuous contract, 1958, then that Chapman wave rogue wave spike that you saw on the 2nd of Feb up at 1975 becomes, it's in play. There's just no question about it. All right, next question was, I think I might have skipped Amazon. So Amazon, yeah, I think that Amazon is telling me a story about this whole mixed economy. That Amazon, you remember it came off that 81 low. I remember we had a caller, George, I think it was from Boston, got in 84, and it just spiraled all the way to the 200-period moving average in the 114 area. And then it plunged, it gapped down at an island reversal. It came all the way back to just under 90, and now it's trading at 98. And that's telling me that this is what I'm saying, that this is a very select market. There are certain areas that have had a very big bear market, and they can have a retracement here. I'm only calling it a retracement. I don't know if Amazon's made its low. I do know that it's made a low. I don't know if it's the low. So yes, it's acting very nicely here, and I can see it at 98. I can see it retrying. The big test will be at 101 to 102. If it's able to break and close above that on a weekly chart, that will be good. Next question is, where did it go here? SHEL. Thank you, Tom. SHEL. Oh, my. Down 277 at 52.78. So let me just do the Chapman wave notation here real quickly. The idea is to identify the lowest low. And if it's historical, that's so easy. You just go back and you say, that's the lowest low. It's not so easy when you do it in real time. You need other tools. But here we go. Peak B, pulls back sharply. Since this is your starting point, anything that doesn't take out the low that was made right there in the 45s still keeps you in the buy signal. Maybe not yet a buy mode. And then it goes C, D. It would have been an instant restart if within 3 bars, it made a new E. Instead, what it did is went E and stalled at a peak F. Right there, double top, peak F. And I can put a down arrow in because it's broken all the technicals. And, you've just got to be really careful with some of these stocks. So Shell is Shell Oil PLC. This is a multinational oil company. I would just say, whoa. Zakuta, I don't know if you're in it or you're looking to get in it. We used to have someone in the den, Gigi, goofy golfer, and he used to sell. This is the meta stock. Sell meaning in your imagination, sell you these metal gloves to buy a falling knife. So I would not even touch it. 3 gaps to the downside, great. You could have a wonderful pop to the upside, get back to 54, is at 52.80, hit 50. I'd just be really careful. This is under duress, and it's the kind of market duress that says until it starts to change the trend where you can say it's in an uptrend, that'll take weeks. But let's just say in a couple of weeks' time, let's say the end of maybe the 3rd week of April, the very beginning of May, you're seeing Shell in the 58 to 60 area. That's going to be a big ask. But let's just say, I mean, who knows, right? It breaks 56 on a closing basis and then has another week or two pushing higher. That to me says whatever happened before, they are trying to repair the damage internally, and it's a good sign. Until that happens, unless your timing is perfect to get the low, and you could get the low right now with perfect timing, but you would have to treat it as a very short-term trade. So Shell, SHEL, trading at 52.84. Please be very, and let's just say, I don't know, you didn't say, but if you are in it and you want to, what should I do? That's always terrible. Now, a lot of people say, at this point, you're going to get 52.86. You don't know what you're going to get in the next 10 minutes or so, or in the next day, or the next week. So I would definitely, if I've got something, I'd take something off without even a question right now. I have a particular technique I try to use as much as I can, that if I'm in something and it suddenly goes against me, if it gets back to where it was, I either take the whole thing off and then say, now would I buy it or would I sell it and start fresh, because my mind is now fresh. I don't want this thing hanging on my, wagging its finger saying, I told you should get out, I told you. No, that is the worst thing to do. I would get out of it. I mean, we got out of a stock at $1.74, I think it was. And I think it's trading now under 90 cents. So you've got to get out. You don't know where it's going to go to. Some of the position, at least, to know that you've got some cash in your hand. All right. So with that said, next question was looking for an entry in TMO. Now, TMO, Thermo Fisher Dynamic, I've passed this on Route 128, Route 95, actually, they changed the symbol. Here in Waltham, in Boston area, for decades and decades, absolutely fantastic company. I'm trying to ring Theodore Darkus, I can't remember the guy's name, who ran it. And every company he took over, it just made it bigger and better, and all the Thermo Fisher Scientific Inc. It became Thermo Fisher, then it became Thermo Fisher Scientific. But it's stalled right here. I'd be a little careful. I'll be back in a moment. Basil Chapman.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, so we're looking at TMO, which is Thermo Fisher Dynamic. Fantastic company. I just think that it's a little difficult. Now, if you've done your homework and you're liking it, and all you're saying is where would I put an entry point? It's at 547 right now with an arch formation. Can we look at it? Can you remind me either tomorrow or the next day? I just want to see if it's able to get above 554. I'd say, okay, now you can start to move because it could go into the middle of that whole range. But at this particular point, I have to see if it's going to test the left side low. So as we're going to wrap up and hand you over to Steve Rhodes, should be a great show always with Steve. Don't forget, Tommy O'Brien starts us off at 9. Really good conversations today. As always, in the, morning market kickoff. You got your peak D now in the 1-minute chart. This is now a new leg B in the 10-minute chart of the E-mini. I like what I'm seeing, and as I said, the 10, 20, 10, 10-30 time is this is where I notice, just in my own work, this is where I think the players who are now putting on bigger positions feel a little bit more comfortable. This is the time that they want to start doing it. So if this is going to be maintained under this negative backdrop, you want to see the Dow, which is down, now it's only down 130. I want to see it down only, as I said to subscribers, as we go along. The Dow in many ways, different ways. But in this trading position that we just put on yesterday, I want to see the Dow down minus 60. And even if just for a brief moment it goes positive on the day, that would be a really good sign to be just saying on the very short term, we are so oversold that there's some kind of a relief to the upside. What is important is that suddenly you've got leadership. And where have you got leadership? You've got it in the QQQ. To me, that is very, very integral to what I look at in the market. Nice move up in the QQQ, up $1.41 right now at 300.28. I like that. And that is helping the general market. Now you got to reverse with the Qs are leading. Instead of the Dow and then the S&P and the Qs, we've now got the Qs, S&P, and the Dow. I don't mind that. I don't mind 100 and 300, 500 stocks leading the 30. Not at all. So with that said, I'm about to hand you over. Don't forget, check out my opening call, my daily newsletter. And this is a very complex time. There's nothing that is just straightforward, except if you were lucky enough or fortunate or perceptive enough to actually go short earlier in like mid-February and stay short. You don't have to be doing anything right now until you decide to cover. That's a much easier thing than having long positions and having to try to adjust those. And 10:45, I'm thinking that's the last segment to come. I'm busy rushing through all this stuff. Take your time. You're okay. There's plenty to do here. Yes, that's First Republic Bank shares, exploring strategic options, zero hedge. Oh, yeah, they better go for strategic options. So a statement comes out here. Bank of America gets over 15 billion in new deposits as trust in small banks weakens. So we have periodically we go into Bank of America over the last 7 years or so, and we stay in for months and months and months, and then we get out as it makes a high. We start to take off positions until we're out completely. Then we get back in. This is the first time in a long while that we haven't gone into Bank of America. It's acting really poorly, and this is the thing that you never know. Every crisis, every market crisis always involves the banks. You know, we thought the banks had this protection. They had this stress test business going on, and they were looking really good, and people were talking about, and yet look at this. Bank of America goes from the 37 area down to 27 in a month. That is horrendous. Now, you have got, J.P. Morgan. You've got J.P. Morgan. Yeah, it's also a big move down, 144 down to 126. But it's still not as bad a looking chart as Bank of America. And that mystified me. So within that context, a question came up about Citibank. So Citibank is not right in between the two. It's not as bad as Bank of America. The monthly actually doesn't look too good. But on a shorter term, it's holding a little bit better, but it did go from the 53 area down to the 43s. And, they're all in the same position. And they're all going to be, it's going to take a big process and a little while to resolve this. If it's easily resolvable, I don't know. So here's the other question that came in. Where is it? It was a statement. Warren Buffett adds to his Oxy shares, adds to 23 points. So Oxy, OXY, Oxy. They're lucky to have Buffett because this stock is about to test in the big arch formation, test the low of June of last year. Was it May or June? I think it was June. Yeah, it was June, the week of the 17th and 18th, the low of 54.35 and 54.30. 54.30. It went all the way down yesterday to 55.51. So this is going to be very important. Yeah, I mean, look at this. Exxon, we spoke about this. For weeks I've been saying upside's limited. I wouldn't really short it, I said, but I would definitely be taking some profits off it. And there it is, going from the 120 area to 99. So that's 20 points. Was that a 23% decline? And you've got a peak D in the monthly now and a peak F in the weekly. So this says that whole area of the oils, boy, I'd be so careful. Look at this. This is oil itself, crude oil. Look, it took out the left side. This is now the first week that it's way below. You've got 3 weeks in which to close above 70.80 in the continuous contract. But this is in the monthly chart, leg C to the downside. This should be helping the general market. So it's all these other things that are really frustrating everything. Could I look at PINS, pins? I looked at it the other day. It was actually doing quite nicely on the rebound. Then it gave it all back. So pins is 2601. This is Pinterest. Discovery engine for recipes, home ideas. I always think it's kind of to do with interest rates, and it's not. It's to do with recipes. So, yeah, this is interesting because it's in an area that is like personal. In other words, it could be a little bit market avoidance in terms of what the big picture is showing, and it's at 26.10. You see this 200-period moving average that's been a magnet on the upside. It's like a fulcrum. It's like a propeller shaft goes up, then it comes back down, it comes back into the middle to the fulcrum again. Yes, if it can fill the gap that it had about 5-6 sessions ago in the mid-26s, and let me make it as simple as possible. If you are long this, it's looking okay. If you want to get long, right here at 26.11, I would say you can start your position for 2 reasons. One is the candle, the long-legged candle that we saw 4 sessions ago with the low in the 23, did it make a round number low? 23, 23, 23. Oh, let's just see. A round number low. 22.95. No. Okay. So this is a 922. So it's up 4 points already. I like this because the weekly chart, the 9 period, is still very strong. Yes, I do like it. I would treat it as something that's under the market radar. So that's number one. Number two is if it can create this cup formation and in the next, it needs speed. So I'm going to give it all the way to Thursday week. I'm going to give it 6 to 7 trading sessions. It doesn't have to close, but if it can sneak once above 27.55 and the on-balance volume can actually accelerate on the upside, I would say that's going to be a good stock. At this point, just start a position.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Yes, let me just do this. Now the Dow is positive. It's up 60. I don't know what the story is, but that's very important to me. And when I say to subscribers, we've got to see higher highs and higher lows. And if it can go positive, even for a brief moment, that's going to be a big relief. And you should be seeing a little bit more running coming in, and that's really important. So questions came in. Rio, I just be careful with Rio. It's still on the way down, but I think it's getting close to a point where it could have a good rebound. I don't mean a rebound, but I mean a good rebound, and it'll be from, it's a 64. I'd like to look at it again tomorrow, but I think it's getting close to at least a rebound for the H pattern to at least test the 68s, maybe 69s. Next question was, where did it go? Where did it go? Where did it go? Oh, quickly. Now we've got to rush through. Did that. Pins, I did that. Which was good. Yes. All very nice comments by a lot of people in the den and in Tiger TV about Goofy Golfer. Yep, we used to, whenever he came back from Florida, we'd be in contact. So this is a leg A to the upside. PCTs, pure cycle tech, recycles contaminants into pure polypropylene. And, you know, I read this a long time ago. Oh, man, this is right in the sweet spot. But the market doesn't know it's in a sweet spot. It plunged from 10 down to the 4s. Now it's got a big spike to the upside. I would say let it test the high today is 680. If it can get to 720 by Monday afternoon or Tuesday morning, I'd say that's really good. If it gives back a chunk, it's a news-related thing. So let's just do this. The day is young. There are news stories all over the show, but my tidal aspect, where I see the tide changing, says there's just enough strength in here to see a decent rebound, and that rebound could actually accelerate into next week if a whole bunch of things will occur. I'll talk about them, and that interest rate thing is part of it as well. I'll talk about that tomorrow. Don't forget, wonderful programming coming up. We've got Steve Rhodes, you've got Thinkorswim, you've got Dave White, you've got Larry Pesavento, and you've got the one and only Tom O'Brien wrapping it up at the close.